market participants are worried as the weekend brought more bad news on the coronavirus, so the US dollar has got the second wind, proving its status of a safe haven asset. Crude oil has slumped to an 18-year low, with the prospects for a further decline. Remarkably, markets gave a weak response to dismal macroeconomic data, like the sharpest ever surge in the number of initial jobless claims in the United States. At the same time, investors are highly sensitive to the news on the coronavirus and its fallout. In his speech on Sunday, Donald Trump said that the national economy would not be reopened ahead of schedule. Traders are again seeking shelter for their savings, buying up the US dollar. Its index resumed growth of Monday following a 5% drop last week. In the New York trade, the index gained 0.5%, having nearly touched 99. It's likely to climb above this level in the short term. The US government prolonged lockdowns until the end of April. The White House had to revise its rhetoric. Healthcare experts presented a peering forecast on a further extent of the coronavirus pandemic, judging by statistics from the US. They worry for the obvious reason. The US stock market is retreating from recent highs, which were conquered mainly owing to news that Congress had approved the financial aid package worth $2 trillion. The Dow Jones Index jumped 17% last week, but today it's trading in the red, having shed over 4%. The equity market is set to decline in the nearest days. A steady rally needs at least a slowdown in the pandemic rates. The Canadian dollar asserted strength amid a temporary weakness of its American rival. Nevertheless, the loonie came short of expectations as it reinforced just to the level of 1.40 versus the US dollar. Though analysts expected more strength, perhaps dollar bears gave up too early. Today, traders are again going long on the US dollar. Crude oil has hit historic lows. In this context, the USD cut pair rebounded to 1.42. Meanwhile, the oil market has got stuck in dire straits. On Monday, both benchmark grades tumbled to the lowest level in 18 years, amid a collapse in demand and the lack of spare capacity in oil inventories. Saudi Arabia announced that it would pump up oil exports by 600,000 per day in April and May. Energy investors assume that oil prices need to plummet to $10 a barrel to reboot the market and trigger the mechanism of destroying the oil supply. Now Brent crude is trading at the level below $23 a barrel, while WTI at nearly $20. A 50% slump in oil prices since the early 2020 accounts for contraction in the number of drilling rigs in the United States. Baker Hughes reported that 40 drilling rigs were suspended last week. That's all for today. We wish you profitable deals and waiting for you on our channel tomorrow. See you.